Hello and welcome to another update video about HBAR. Yeah, it starts to become quite a boring price structure here because it could really be that we are in this triangle that we talked about a few times now. Yeah, on the HBAR chart, a couple of options here. We have, first of all, let's start with the bullish scenario. In the bullish scenario, price rallied off the December lows in a wave 1, highlighted in white, then came down in a wave 2. This 1-2 setup is unreliable because price came down too deep for a reliable wave 2. Yeah? It's not invalid, but it came down below the last reliable bullish support level, which is why I take all of the price action that HBAR is working on right now with much caution. Yeah, and I'm not interpreting this as too bullish because it came down too low. So in my opinion, it needs to prove itself. So it could be in a third wave, yes, but it recently only rallied in 3 waves again. As you can see here, there's a WXY structure. So the only way we could really rally in a third wave would be in a larger ABC structure, that this was an A wave top. We came down in a B wave, and next we're going to rally in a C wave. Because then we would look at this entire move as a diagonal structure. Is it reliable? No, but if we break above the, where are we? The last swing high here at 7.6 cents, followed by a break above the 78.6 retrace above 8.1 cent. Yeah, I would assume we get to we go higher in a third wave. Yeah. However, there will be targets along the way. So as soon as these targets are broken, or these levels are broken, we could be looking first of all at the 11 cent level, which is the 1.1 to 1 ratio, and then 20.7 cents would be the more extended target for a third wave. But that would need to prove itself, okay? I'm not convinced about that. Then we could be here in an Elliott Wave triangle, highlighted in yellow. The reason why this is becoming quite likely is because we came down too low, obviously, here. Yeah, that was in June. Last rally was corrective, a lower high. It might very well do another higher low now in a D wave, yeah, and then another, another higher low, yeah, and another lower high, and could then make a new bear market low. What are the relevant pivot points for each scenario? So for the bullish scenario, as I explained, which levels it needs to break above to make it more likely, but it certainly would need to hold. Let's just adjust this area here. So for the bullish scenario, I want price to hold the 4.6 cent level. Any break below that will make this bullish scenario very, very unlikely and would be an early warning that we're in a triangle or already breaking to the downside straight away. Yeah, and for a triangle, a break above the 9.9 cent level, that would invalidate the idea of a triangle. But it could still be just an ABC structure or something. So poor probabilities on this chart. I think short term, yeah, I mean, this is Elliott Wave structures. It tells me, it looks a bit like a triangle, so it could really become this sort of triangle. What does Elliott Wave tell us? Elliott Wave tells us few probabilities here, few possibilities, balanced probabilities, because the chart is just moving in corrective structures, so not clearly bullish. You know, any chart can always rally in a bullish in a corrective structure quickly, but they often fail again, as HBAR did. Yeah, it's not reliable. Certainly nothing for someone who is looking for something clearly bullish. So what we have to expect with this chart is a quick up and down movements, quick turnarounds, yeah, headwinds basically. And Elliott Wave tells us we could be in a range for a while, yeah, as long as we stay within those parameters that I mentioned. And it could be quite boring, and it could actually lead to another bear market low. What does anything else tell us? I mean, what can we do? For example, we could use a trend line to get an understanding of the short-term trend. It's a fairly well-defined trend line. A sustained break below that trend line would likely send us deeper into this Fibonacci support zone, 5.1, 4.6 cents. And I told you what happens if we break below 4.6 cents. Yeah? So short-term uptrend, yes, not a reliable one. You can see how the selling is getting stronger up there, and also the recent bounce didn't even make a new high yet. So yeah, it's very, very corrective, very much overlapping price action, and it's not very desirable, this price action. It's not clearly impulsive, rather corrective. I gave you my view of the resistance areas, but yeah, anybody, you know, if you're looking for anything on the long side, you've got the trend line you can follow. But from an Elliott Wave point of view, I mean, this is nothing desirable. That first would need to prove itself that it's turning around back to the upside. I can only warn, this is not clearly bullish. And typically, what I always say is even more important than knowing what to trade is knowing what not to trade. And I can guarantee you a lot of people will burn their fingers on this chart, yeah. Especially if you have no risk management in place. As you can see, this is just a range we're focusing on, yeah. It's just a range, but I told you the relevant parameters anyway. And it would really take a breakout to consider something different. So yeah, I think we are going to see a bit of sideways action here for a while. Quick up and down movements, a lot of headwinds, and potentially really this triangle A, B, C, D, E, which could fill in and eventually leads to another low. Yeah. It would need to prove to me that it's more bullish by breaking out above the relevant levels here, 8.1 cent and then 10, and then we arrive at the 11 cent threshold first, next, and then it could take it to 20 from there. But that is distant future here from where we are now. That's my update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.